Hello, everybody. Today's buzzword is the ultra wealthy. As much as we hate these people, and I'm not in the 1%, but I can definitely take what they do and implement it into my life so that I can have a little more of a fulfilling life. But today I want to talk to you about how to prepare yourself, not just mentally, but also financially for any sort of economic change. We look at these individuals who are extremely wealthy, and it seems like no matter what happens, they come out on top. And there's a reason for this. Most of the time, they're prepared. And by prepared, I don't mean you have $150 billion in net worth sitting around for you to maneuver around different markets. But we can take what these people do, scale them down to our size and our financial situation, implement those with some discipline, and eventually reach, close to where those people are at. So when we're looking at, moving into a recession and looking at what these individuals do, a lot of it, surprisingly, I'm not just here to peddle real estate, but a lot of it is residential real estate. They are involved in the stock markets, but that's a little bit less of a leveraged and a more volatile market than we see here in the real estate game. So when we're talking about, hedging against inflation, you probably hear this all the time. This is what people do that are successful. They don't necessarily make more money, but they figure out how to keep more of what they make. Part of that is by buying good assets that are appreciating. I've said this before and I'll say it again. If you're not investing in something besides just holding cash, you're technically investing in the US dollar, which is losing, as we might know, 9% a year right now. Not a good long-term investing strategy, if you ask me. Now, I'm not telling you to go out and acquire 150 properties so that you can cash flow and have some income. We can do this with just our primary. And what this does is basically build equity for us in the background, even though it may seem like we're in a downturn. From this time last year here in Colorado, we've seen a 7% decrease. Let me rephrase that. We've seen a 7% decrease from our height of this year in April, but we are still 8% above where we were last year, even after the 7% decrease. And so I have individuals come up to me and they say, I'm waiting for the market to crash a little more and a little more and a little more. And it's like, we've had a 7% correction here in the last 4 or 5 months. I don't see that being sustainable for very long. Even in 2008, when it was the worst of the worst, we only saw about 19.7% across the board get wiped out. And so we are approaching that halfway point. We don't know if this is going to be worse in 2008. I speculate no, because lending terms have changed. We have the Frank Dodd Act and all that good stuff. And so for us to be looking at this from a perspective of how do we keep more money during the recession and not necessarily just make more, that can start to shift our attitude and how we approach these things. So look at what the ultra wealthy are doing. Reach out if you need some guidance on what they're doing, because there's a few different things that they have their hands in, and we'll get you squared away for you to build some wealth in the future. We'll see you next time.